Hello and welcome to Euro and Daily Trade Ideas and Analysis. I hope you all had a great trading day with the market hitting a big bull run today with about over 250 pips of bullish move today. And with this move, the market has achieved a lot of its upward targets and broken some resistances. But currently, the market is at some cluster of resistances, and that we will see in detail in the lower time frames. But before that, I would like to show you that the market has completed its ABCD pattern that we've been talking about. A, B, C, and the D was at around 133.70 area, and the highest it has reached is exactly the 127 extension of this upward move. So apart from that, the market has clearly shown some strong bullish signs. The market is comfortably over the 3 by 3 moving average, 25 by 5 moving average. The stochastic is still at buy, and the MACD predictor is also showing a buy signal currently. But the momentum indicator is currently at overbought. It's pretty much it's at its highs, and it is at overbought. And the market would generally tend to show some bounce back whenever it is at overbought, because that's a pretty uncomfortable situation for the market to continue in. And apart from that, now we also have a new divergence in place, and this seems to be a little more convincing than the one we saw a couple of days ago. Let me just draw it again, and yeah, we can see about it. Now, this was the previous highs over here, and this is the current high. And if you look at the MACD chart, you can see that it is a good divergence that we could probably follow, and to support this short-term downward move idea of ours, probably, I mean, we have other indicators as well. And to look into that, let's just look at the 4-hour charts to begin with. On the 4-hour chart, this was the rectangular pattern that we saw yesterday, and like I said, this is the first target for the rectangular pattern, and which was just above the weekly pivot resistance 1. But given the kind of consolidation that happened over here and some serious fundamental situations with the FOMC meeting and other events, we did expect the market to bounce, not stop at the first target, but continue further. And whenever we are trading a rectangular pattern and the market does not stop at the initial target, we can determine its next target by replicating the first length of the target above it, and that would give us the next target based on the rectangular pattern. But here I also want to mention that apart from this, the higher target on the rectangular pattern, there is also the weekly pivot resistance 2 over here, and incidentally 134.55 also happens to be the monthly pivot resistance 2. And slightly above it, where the market has exactly hit today, is the 127 fib extension of the upward move that we saw on the daily time frame. And so given this kind of a situation, and also the overbought condition in the momentum indicator on the daily time frame, I really expect the market to show some bounce back at this stage, even if it's not a reversal. And we can also see that it has formed a kind of a shooting star candle pattern over here, which is also a bearish sign. And a shooting star, again, necessarily is not a reversal candle. It only shows that there needs to be a temporary reversal, at least to a minimum of 50% retracement on the upward move. So apart from that, you can see the MACD, it is widely bullish currently. And yeah, we should, if you still think the market has more room to go up, I would suggest that this is not the best time to take a long position because of all the factors I've just counted on right now. And if you're a scalp trader, you could look for some bounce back, which will also not be small. I suspect it would be at least about 150 pips or so. So let's look at another chart of the 4-hour time frame, and just to determine what can happen over here. Now you can see that I have drawn the Fibonacci extension on this, and if you see the daily time frame, this was the initial A, B, and BC leg, and along with it we expected the market to hit the 100% over here, but the market has broken the 100% and it has exactly achieved the 1 to 127 extension on the Fibonacci. So this is a very significant target, and we should expect some bounce back at this point. Now, to determine what is the minimum bounce back that we can expect, there are a few patterns that we could go by. First thing is, of course, after a good upward stretch like this without any retracement, we could go for a simple Fibonacci retracement over here, and according to that, the target would be at a minimum of the 50% support, which is at about 133.36 area. But given that the euro yen also often retraces to 618 resistance support at least, we could have the target also at 133.02. But apart from these two targets, I also have another pattern in possible play in the daily time frame. So let's just take a look at the daily time frame again. Here we have something like a three drive pattern over here, and this would be the first upward move uh, with a retracement, and followed by the second upward move and a shortish retracement over here, and finally the current move to the bullish side. So this can be traded as a three drive pattern, and the target for a three drive pattern is to at least take out the previous lows, which is right here. So this would also be logical given the quantum of movement to the upside. It would be logical that the market attempts to at least take out the previous lows, which is at around 131.66 area. So we could trade this cautiously, and one thing I would stress on is right now is not the time. If you are still bullish on the market, right now is not the time to really look at a long position. You should wait for some retracement to happen. And if you are looking at some scalp possibilities, it is a good time to go short. And depending upon the two patterns that we have, one is a Fibonacci retracement and the three drive pattern. You could look for either of the targets, and then we could see if there is another possibility of a further upward move or a continuation of the downward move. And apart from this, we have nothing new on the hourly time frame, and yeah, it is a pretty much a straightforward chart over here. But on the hourly time frame, I would like to bring you to the notice that we have another Dinopoli directional pattern in play over here. It's the double repo sell, which could probably happen. And here you can see that the market has been consistently upwards without any proper retracement. And currently the market is has closed one candle below the 3 by 3 moving average, and the market is looking to move above the 3 by 3 moving average as well. And if the market closes above the moving average and the next close happens below the 3 by 3 again, that would be a confirmation for the double repo sell. And again, the target for the double repo sell is the 618 retracement in the case of euro yen, and this is similar to what we saw in the 4-hour time frame. It is at 133.20 area. So this is also another pattern that we could look to trade. And anyways, bottom line is, right now I do not see any possibility why the market should continue to move higher without any retracement. So tread this cautiously, and again, if you're a scalp trader, you could look for some possibilities to enter short. Happy trading again. Thank you. Bye bye.